Hey everyone, welcome back to another video on the channel. Today I'm going to be covering SOFI earnings and my stance in positions going into SOFI earnings. Let's start off by going to SOFI here. So SOFI reports earnings on Monday of this coming week. We can check it out down here. Whoops, up here. Expecting a 7-cent loss per share. Like I said, pre-market on October 30th. So before market open on Monday, they'll be releasing earnings, and I don't have any personal opinion on direction. I don't want to give any kind of prediction on where I think it'll go because I don't want to mislead anybody, but I did want to make a video on what my positions are and what stance I sort of take on SOFI because of those positions. So let's get straight into it. Starting off, we have two credit spreads on SOFI at the $7.50 $7 strike, and these are for the November 24th expiry. We opened for an average credit of 11, and they are currently sitting at 27. So we are currently down about $32 on this position. And yeah, let's see what we can go over here. So essentially what this was a directional play. This was me opening essentially a cash secured put, but I opened it as a credit spread instead, in case the stock ended up tanking. I didn't want to take on a huge loss from the potential that it will drop leading up to earnings or as a result of earnings. So I ended up opening this as a put credit spread as opposed to just a cash secured put, and I'm glad I did so because you can see SOFI has fallen quite a bit. When I opened this, SOFI was trading, we can see here date open 10/11. Let's check that out real quick. 10/11. When I opened this, wow, I picked the exact top pretty much on SOFI at the $8.60 price point. So I opened these put credit spreads at $8.60, and obviously we're down here at $6.94. What's good about this trade is obviously I opened it as a spread. So if we look at the actual cash secured puts themselves in this spread, you can see we're down $144, which is huge. It's a big loss, especially in my portfolio. That's about 2% of my whole portfolio. But if we move on down to the puts that we bought as insurance, these guys are up quite a bit, up 112. So by buying this insurance, we didn't take on as huge of a loss as you would have expected. We only took on a $32 loss, even though the stock fell straight through our strike, and by about $2. And yeah, pretty much by about $2. So if we had just opened the cash secured put, this would have been pretty tragic, but here we are with the two put credit spreads, and my objective with this is that by expiration, if this is in the money still, I will close out the long puts for a profit, and I will roll these into regular cash secured puts at a lower strike price. So if SOFI dumps on earnings, we can roll these out to a lower strike for a credit. So perfect little play here, but this does mean that if SOFI goes up, then obviously this play will make money because it is a bullish play. So that is one of my positions going into earnings here. Let's go back and let's look at these debit spreads here. So we have 3 call debit spreads on SOFI at the $12 and $15 strikes. Our long call is at the 12 and our short call is at the 15 for the expiration of January 17th of 2025. So this one is about a little over a year out at this point, and what this is basically saying is I believe that SOFI will be between or above 12, or I suppose above $12 by the expiration of these two contracts. And because it is a debit spread, I've opened for an average cost here of 43. I originally opened the first one of these at somewhere in the 50s. I opened a second one in the mid to low 40s, and I opened a third spread here at the low 30s, which was where we are currently sitting at. So we're currently sitting at a loss of $35. And in addition, I do hope to hopefully buy more of these for when SOFI hopefully announces profitability later in the year, which I think will bring the stock price up quite a lot, which is why I'm slowly dollar cost averaging into these low cost yet leveraged positions, because even though it's only costing me $30, the max gain on this is $270 because it's the width of the strikes, meaning that if SOFI is above $15 per share in 2025 when these expire, we will make the $270 remaining in this spread by only paying 32. So it's essentially a way of getting leveraged exposure to SOFI without actually owning shares and for a cheaper price. That is why I opened them. And going into earnings, we are holding 3 of these. So once again, a bullish stance on SOFI. Not saying that I think the earnings will necessarily be bullish. I'm just saying that in the long term, I am stanced bullishly on this stock. So yeah. Like I said, currently down 35. If SOFI goes down, these will obviously go down. The delta between these is pretty low, so if SoFi does tank even a couple dollars, we'll probably only lose about $30 on this. So it's nothing crazy. We did, however, see the last time SoFi had earnings was right here, or sorry, right here. So these spreads popped from 61, and I originally bought these somewhere around here-ish for around 50, and so when it had earnings last time, it popped from 60 per spread to 94. So if we see any kind of jump like this because of good earnings, then obviously these spreads will be making a lot of money. If the market drops as a result of the earnings, then they'll be losing money. So once again, just a bullish play, but a very long-term play. So yeah, those are both of my positions for SoFi going into earnings on Monday. I don't know if you guys have any SoFi. If you do, comment down below your positions on SoFi. I'd like to hear. And yeah, we'll just see how these come out. Hopefully it's bullish. Obviously, I'm hoping they come out good and the stock rises. But once again, I have no prediction or necessarily any bias going into this. My positions are both hedged either way, but obviously biased to the upside. But yeah, we will see, guys. So maybe I'll make a follow-up video. We'll see. But yeah, comment down below if you have any position in SoFi. I'd like to hear that. And thank you for watching. I'll see you in the next video.